The best of Money Matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hung Bin Jung. Earlier this year, Temasek had reported a record net portfolio value of 434 billion Sing dollars, marking a $45 billion jump, or more than 11% growth over the past year. Now, this strong performance comes amid a challenging global environment and reflects the strength of themes driving markets today, from AI and digital transformation to the green transition and the rise of India as an investment powerhouse. But beyond the headline numbers, this raises an important question. What's behind Temasek's success, and what lessons can everyday investors take from its long-term diversified strategy? Well, to find out more, I'm now joined by Alain Lawrence, who's the CIO of Balfour Capital Group. Steve, welcome back to the show.
Thank you for having me on, and it is very exciting times in the global markets, to say the least.
Definitely. Well, Steve, let's start off. The record net portfolio of $434 billion by Temasek. From your perspective, what are the key factors that have contributed to this remarkable growth?
What's made Temasek so valuable is they understand diversification and they understand their business, but more importantly, long-term growth in technology, and by acquiring and by organically building at the same time. Very similar, believe it or not, to a company like Google, okay? So it's a true powerhouse.
There were significant gains that came from Singapore companies, which was 41% of the portfolio. We had global direct investments, which was 36% of the portfolio, and strategic investments in digitalization, sustainable living, future consumption, and longevity. Notably, India's share of the portfolio was 8%, showing growing interest. What do these themes or sectors reveal about the real growth drivers of this year, Steve?
Well, what you're going to see about the traditional markets is traditional markets aren't traditional today. Think about it. Look at a company like Intel. A year ago, it was at $21. It's already doubled. And it's just reinventing itself. When you look at the diversification of Temasek, it's very almost similar, not only to like a Google, but a mini BlackRock. All right. So it's just acquiring and just truly diversifying its portfolio globally. And that is the value proposition. You're getting exposure globally to that security, to that stock. No question about it.
Well, other than the themes and the sectors here, Singapore, China, the U.S., and India made up the bulk of the portfolio. How does geographic diversification influence risk and returns for an investment fund like Temasek?
For an investor, I can't speak directly for Temasek, but what I can tell you is that they're not reinventing the wheel. What they're doing is it's a very similar process that you've almost seen like a Warren Buffett do. But the difference is it geographically, it understands exactly what not to do. If you look at the companies within their portfolio, they all have the same reoccurring thing. Number one is solid cash flow models. Secondly, and more importantly, the industry. They understand how to really pick the right industry long term because they have a much longer term approach than the public does. That's what the public needs to understand. They're not in it for a day. They're not in it for a week. They're in it for years. So their time horizon is completely different. But as an investor, and you want to go to bed at night and you don't want to really look at the market all day, because that's what it actually takes, you can put your money into a company like that and take a look at it in 10 years, and I think you're going to be very, very, very surprised of where it will be in 10 years.
Okay. Well, taking a look at their strategy here, Temasek continues to invest heavily while also divesting strategically. They've got $52 billion in new investments and $42 billion in divestments. Now, their approach balances growth, sustainability, and diversification. So how does this approach help manage portfolio risk while also capturing growth?
Well, many times when you're divesting from something, the question is, A, why? Secondly, they may think something is already valued of where it's attained it. That's one of the things that they're experts at. Just think of it, simplistic terms always work well. If you have a cost basis, for example, of something at 2, and you've been in it for 8 years, 10 years, you get rid of it at 10, even though it may go to 50. Their divestiture in any product doesn't mean they necessarily liquidate the whole thing. It means maybe they just liquidated part of divesting it so they can deploy money over the long term in different value propositions that they clearly see, and that's what they're actually telling you. The public doesn't understand. It's all about their time horizon. That's what the public needs to understand, and the listener needs to understand about time horizons.
Well, aside from, time horizons here, for everyday investors then, what lessons can be learned from Temasek's strategy of, balancing new investments with divestments in less aligned companies?
Okay, the first thing that the listeners and the investors need to understand is this. To understand global investments, it's a 24/7 job. You cannot invest professionally if you're not a professional. What do I mean by that? I mean, you could, if you have a toothache, you could theoretically pull out your tooth, but you go to a dentist. Okay, my suggestion is that they align themselves with high-quality advisors and wealth managers and make the best investment. And the best investment is themselves by acquiring knowledge and doing what they do for a living. If you get too caught up in the markets and you're not a professional, I can assure you you will endure pain because of the lack of experience. It's a very emotional business, but it's a very quantitative business, going back to understanding yourself as an investor. If you want to gamble, you got plenty of places to go gamble at. You can get a 50-50 anywhere. But when you're investing, that's different. And that's what separates people who make money and don't make money. There's no such thing as a quick buck in the market. No such thing.
Okay. Well, Temasek's sustainable living investments also grew by $46 billion, and the firm is committed to reducing total portfolio emissions and reaching net zero by 2050. Given this, Steve, how important is sustainability as a driver of long-term growth? And is this something retail investors can integrate into their own portfolios?
Sure. Okay. However, you need to understand that the ESG sector is starting to become more efficient. For example, we've seen all EV sales actually be down. But the real key factor, this is the key factor, as we build more data centers globally, what do we need? We need electricity. Therefore, fossil fuels, and other sources will still have a very strong foothold in the market. And the market's telling you that. So it would be harder to be more profitable in, let's say, the EV sector and the automotive sector. Without question. You just saw AWS go down last week, and that's not a joke. I mean, there's a lot of factors with electricity, so it's going to be a big catch-22.
Okay.
As electricity prices go up, the investment could be more expensive. So you really have to know exactly what your horizon is, because it will go through some tough periods, like Tesla. Regardless of the price of the stock, the market is telling you something with his own diversification within his own company. Numbers don't lie, people do.
That's right. Numbers don't lie. People do. Well, given Temasek's long-term approach here, what are the key takeaways for individual investors looking to build, such a resilient portfolio, Ben?
The takeaway is this. Number one, when you invest in a company like Temasek, understand you're investing for the long term, not the short term. That is the number one rule, because it will have gyrations of going up and down. It's not your typical company. It's way above that. It's a company that has built the foundation for the next 100 years, if not more. That's what they're doing. They can take that long-term approach, and that is what the listener needs to understand. It is a long-term approach for them, not a short-term approach.
Definitely. But how can everyday investors, apply such similar diversification and trend-based investing and thinking about the time horizon without the scale and resources of a, institutional investor?
A retail investor in today's world has the exact same asset execution strategies as an institution. In other words, the local investor can buy an ETF, can diversify in very, very small chunks if they choose to. They need to understand it's not about looking at a chart or a trend. All right. It's much more complex than that. And you could see a company come out with great earnings and the stock can tumble 20% in a heartbeat. But you're going to say, why? They came out with better earnings. It's the perception of what value is. So it's being in the right sectors, looking at the sectors, and diversifying your portfolio and knowing yourself of what you can and cannot do. There is no magic pill. But I can definitively tell you, anything to do with the stock market or any market is based on time, which equals trust, which equals much more long-term duration. You have to think long-term. There is no other way.
Well, Temasek's 10-year total shareholder return is 5%, showing the importance of patience and compounding over time. And this all has to do with the time horizon that you've repeated there, Steve. But looking ahead, which global trends or regions do you think will drive the next phase of portfolio growth for investors?
Well, right now, between now and the end of the year, what you'll see is the markets will come off. Anytime the market takes a substantial move down, and let me define substantial, anywhere when the market goes down 3 to 5% per indice, whether it's the CAC 40, whether it's the NASDAQ, whether it's the New York Stock Exchange, whether it's the Hang Seng, that's the time to slowly come in and start to really buy value. When you see the big pullbacks, you always have an opportunity to get back into something, and that's what the investor needs to understand. Globally, we're going to see the markets come off about 3%, but it's a buy. It's a long-term buy in very specific sectors. Tech, but the tech that you need to purchase has to be combined not only with AI, but with networks. So therefore, certain ETFs carry that by having less risk. If you want to buy individual securities, very simple. You can buy them, just don't own a lot of them, and you need to know how to diversify it. That's why you need to deal with a professional. That's what the public is actually seeing, because the knowledge is coming from the institutional houses, and they're giving the customer and the potential client and wealth manager understand this is what's really going on. And remember, all the markets literally talk to each other, literally speak to each other. And that's what happens. So it's becoming not a more complicated investment strategy. It's a very simple one and a logical one. The public just needs to understand where their foothold is. Because, $1 trillion today is like $1 billion.
Definitely.
I mean, OpenAI, a $1 trillion initial public offering. Think about what I just said. Trillion. Things are moving very quickly right now, and the AI is creating two things. New opportunities. A company like Amazon, what did they just do? They just laid off 14,000 corporate people. Even Facebook laid off 5,000. And you're seeing, and the reality is, what is that telling you? That they're getting more efficient with the AI, but at the same time, that intelligent job pool that's let go realizes that there are so many other opportunities by being independent. So you're seeing that there's a big shift toward independency and being an entrepreneur today. And that's what the market's actually telling you. 10 years ago, did you think somebody could make a living on TikTok? Exactly. So markets adjust and they create new opportunities. It's a function of time until the robots are on the floor of Amazon filling all the boxes.
Definitely. It is the bottom line. And I think we've got a lot to digest here and some great tips for our everyday investors tuning in right now. Well, thank you so much, Steve, for your time and your insights today.
I always really enjoy speaking to the listeners and being direct and giving an opinion about diversification. And I leave all the listeners on this. It's never how much money you can make on an investment. It's always how much money you can lose. If you go into any business strategy, it's understanding risk before reward. And that is the key to anything, whether it's the market or life, because the life and the market are one. It's a being. You have a phenomenal day today, and enjoy Singapore. It's a beautiful place.
Thank you so much. And thank you so much for the wise words. Thank you. That was Steve Alain Lawrence, CIO of Balfour Capital Group. This has been The Wealth Tracker with me, Hung-Bin Jung.
Before acting on the information on MoneyFM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.
MoneyFM 89.3